one of the big factors that has been troubling global markets is the lack of growth in China, especially the latest PMI numbers, which continue to show contraction, actually the fourth straight month of contraction in the Chinese economy. To discuss more about where China is headed, Shaun, the Managing Director of China Market Research Group, is joining in. Good morning, Shaun. Thank you very much for joining in. Well, how do you assess the Chinese growth numbers? What's your comment on the PMI number itself?
Well, as you mentioned, China's facing a fragile economy. For the fourth month in a row, we've seen that the HSBC PMI index shows a contraction in the manufacturing sector. That's a problem, but I think what's important is to wait and see what the official PMI numbers are, because the HSBC one is more geared towards small, medium, private factories. It's a much smaller data set than what the official numbers are from the Chinese government. But most importantly, I think from a month-to-month standpoint, you're going to have fluctuations in PMI. What's more important is to look at wages and unemployment. And wages and unemployment right now still are fairly strong. So the situation is bleak, but it's not that bad.
Okay. Shaun, hi. Good morning. The Chinese government has set a target of economic growth of around 7.5% for 2014. But many economists feel that they may not be able to reach that target. What's your view?
Well, I actually think the government will be able to reach about 7.5%. I'm not particularly concerned about the economy over the whole year period. The government still has a lot of firepower to do a stimulus program in Q3 or Q4 in case there needs to be. My guess is you're going to see a fairly slow Q2. And the reason is the government wants to really push and transform the economy. So obviously the growth model of China of the last 3 decades is broken. We can't focus on heavy investment. We can't allow the non-performing loans. The real estate sector has become too big. So I think the government is going to allow pain in the short term, especially in Q1 and Q2 of this year, in order to push forward some of these key economic reforms. Now, if the economy drops really far below in Q2, then I think you're going to see some more stimulus in Q3 and Q4. But I don't see a major stimulus anytime in the next 2 or 3 week period. The economy's okay.
Actually, that was what I was coming to. What will be the tipping point when you will expect stimulus? What is the number, either in terms of PMI or in terms of GDP growth? What macroeconomic indicators will the Chinese government watch out for, and what levels?
That's a great question. I think the indicator is not going to be PMI. It's not going to be GDP. I think it's going to be unemployment. Especially university unemployment. There are going to be about 7 million Chinese university graduates that hit the job market in June of this year. If they can't find jobs, and if lower income Chinese start to have higher unemployment levels, then I think you're going to see a stimulus come in. What I expect to see over the next 4 to 6 weeks is light easing. The government is going to probably announce some big infrastructure projects like a bridge or an airport, but they're not going to be new initiatives. These are going to be initiatives that they had already announced a year ago or 6 months ago, and they're just going to accelerate the timetable. But the key is not PMI, it's going to be unemployment and wage numbers.
Okay. How do you see the metal sector pan out, Shaun? Do you think domestic demand will continue to contract in a sector like metals?
So when we interview consumers, I run a market research firm, their confidence is okay, actually. When you're seeing the biggest hit on retail sales, we're not seeing 18% growth like we saw 5 years ago. It's now more around 10, 11%. A large part of that is due to the crackdown on corruption by President Xi Jinping. So you're seeing retail sales are being pushed down, but actually the individual consumer is still spending. The confidence is going down a little bit. I expect them to take a wait-and-see attitude on buying big-ticket purchases in the next quarter, except for autos. They're going to keep buying that. What I think is exciting is the spending is going to move away from buying apparel and footwear, more towards experiences, and that spending is going to go in tourism overseas. So we're extremely bullish on Chinese traveling to the Maldives, Mauritius, Thailand, Australia. I'm in Australia right now. I'm speaking at a conference, and there's just Chinese all over the place.
No, Shaun, I think the reason why my colleague asked you that question was that metal stocks in India, across Asia and globally, generally tend to react to Chinese growth story, assuming that a higher consumption in China will mean, more expense or more consumption of iron ore, of iron, of steel, copper, metals. what you are saying gives the impression that even if the GDP numbers are good, even if the growth numbers are good, it's going to be service-related growth. So metal stocks shouldn't be so buoyant even if they see good China numbers.
Yeah, exactly. I think in the next quarter, you're going to see the commodity iron ore is going to have a rough time because the government's shifting away from heavy investment more towards services. So what causes the commodity prices to go up is not so much individual consumers, but more of the real estate development. And the government definitely is trying to curb sort of the free-for-all real estate development that you've seen in the last 5 years. So in the last 2 weeks, I've gone on an interview with some of the largest real estate firms in China, and they're optimistic in the long term, but they're very pessimistic in the short term. There's a lot of constraints on the credit side and on the regulatory side and on the demand side that's stopping them from building a lot of new complexes. So in the short term, I would be very cautious on commodities. Long term, though, they're going to be okay because the government is still urbanizing. And so you're going to still see a lot of construction in homes over the next 5 to 10 year period. But short term, I'd be cautious.
Yeah, this dichotomy is so much sounding like India, the great long-term growth story which never seems to materialize. So much short-term pessimism. But Shaun, the banking piece, for so long we've been living in the shadow that the shadow banking piece in China could go to pieces. That could be a hard landing. Any color on that? Do you think that's coming under control and we shouldn't worry about a shadow banking blow-up in China?
I think shadow banking is an issue, but it's not that big as an overall percentage of GDP. And just from an overall size, it's only about $4 trillion US dollars, while in the United States it's 24 trillion. So the actual size is an area of concern, but the government recognizes it. It's not like you have a lot of individual homeowners who put 0% down and bought 15, 20 houses hoping to flip them like you did in the United States. So it's an issue, but I don't see it as the same systemic risk as a lot of economists worry about. I think it's something that's going to cause sluggishness and growth over the next 3 to 5 years, but I don't think it's going to cause a systemic risk.
Okay. Just one final word then on what steps you expect or what further steps you expect from the government to boost growth, because in the recent past the Chinese government has taken some initiatives like speeding up of investments in railways, etc. But economists feel that that has not been enough to boost growth. Do you expect any more to come through in the near future?
So they're going to speed up some initiatives. I think you're going to continue to see a streamlining of the bureaucracy. I think what's really key is the Shanghai Free Trade Zone. The government is going to push more initiatives like this. A lot of companies are starting companies that way. I think you're going to continue to see interest rate liberalization. Again, I think the government, for the most part, are taking the right steps. The next 2 to 3 year period is going to be fairly bumpy economically, but I actually think that China, not in the next month, but over the next year or two, is going to outperform a lot of market expectations. The doom and gloom is way too high.
Okay. Well, just a word, where do you get these unemployment numbers? That's one thing we've never been able to track on the wires.
Well, I mean, the Chinese government issues their own official unemployment numbers, which I don't really trust. Okay. What my firm does is we travel to about 15 different cities regularly. We interview everyday Chinese to find out about their wages, to find out about their employment outlook. And we also interview HR departments. Okay. So when we talk with HR departments of Fortune 1000 firms, they're still hiring, just not at as fast a pace as they did in the past few years. The other thing is wages are not growing as fast as they have in the last few years. So I wouldn't look too much at the official numbers. I would look more at what the qualitative of talking to big companies, and if you see a lot of labor unrest. That's what I'm more keyed into to take a look at the economy.
Okay, then we'll take the shortcut. We'll just ask Shaun Rein. Thank you very much, Shaun, for joining us.
That's the best way.